Hey all, my name is Dr. Paul Borosky and I am the owner of Quality Business Plan as well as Quality Business Consultant. And for my business tip number 11, we are focused on creating financial projections for a startup. I deal with a lot of startup companies, and inevitably small business owners, when I talk to them, they have a hard time coming up with their numbers, coming up with how many customers are going to be serving on a daily basis, on a weekly basis, on a monthly basis. And what I do is I explain to them, I give them a little bit of a story, and I say, you know what? I've been doing business plans for about 13 years right now, and I don't know how many business plans I'm going to sell tomorrow, let alone next week, next month, next year. And we're trying to predict your revenues for a business that you haven't even found a location yet, let alone how many customers you're going to be servicing and who you're going to be hiring and all this other good stuff. What we are doing with the basis of your financial projections for a startup, these should be your benchmarks. These should be your thoughts and ideas, and these should be the objectives that you know that you're going to be able to attain, even in the worst of times. These should be conservative numbers to say, you know what, these are the numbers that I know I can hit without a doubt. And those are the numbers that you can defend, because everybody knows financial projections, we're trying to predict the future and you just can't do it. So just keep that in mind. Use your financial projections as a foundation, as your thoughts and ideas, and then you can justify them from there. All right, so with that said, the starting point for your financial projections for a startup is always going to be start with your revenues. And don't just put a number out there that you want to make $15,000 or $20,000 for the first month for revenues. That tells nobody nothing. What you want to do is you want to start with your customers. How many customers are you going to service on a daily basis? What is their average ticket going to be? And then what are your variable costs? What are your variable costs per customer? And so now we all know what revenues are. Revenues is, if you go into a restaurant and you have a steak dinner with a potato and a side salad, you might run up a bill of $50 or $70. Well, that's your revenues for the organization. However, your variable cost, that is going to be how much you paid for the steak, how much you paid for the potato, and how much you paid for the lettuce and the cucumbers and tomatoes, all that good stuff that goes into your salad. That is going to be your variable cost. Now, when you're doing your variable cost, make sure that you use it as a percentage of your customer ticket. For example, if you have a customer that runs up a $100 ticket for a meal and your variable costs are 35%, well, then you know that your variable cost for that is going to be $35. So make sure that you use it as a percentage. And when you use percentages for your variable costs, it's a lot easier to defend, because everybody knows these numbers, they're made up numbers. We don't know because you haven't even started your restaurant yet, but you know based on your experience that the variable cost is going to be 30% or 20%, and you can play off your experience as compared to trying to defend numbers that they can't be defended. You're just giving people these thoughts and ideas. That is, again, the solid foundation of your financial projections is always, these are your benchmarks. All right, so that's how you're going to come up with your revenues. Your variable cost, you're going to be using it as a percentage. So you start with your revenues, then you'll deduct your variable costs. And the next thing what you're going to do is now you have your fixed cost. And just because it's called a fixed cost doesn't mean that's actually a fixed cost and the cost never going to change. It just means that you're going to have that cost every single month. Some fixed costs you may run into are going to be your rent, your electric, your utilities. You're going to have your labor. Well, your labor I'd actually separate it into a different section, but it's still going to be a fixed cost, so you're still going to have it. You're also going to have your advertising that's going to be a fixed cost, and some other things. You're going to have your accounting, your legal. Those are going to be your fixed costs. So you start with your revenues, that's your money coming in, and then your variable cost is money going out, and then you have your fixed cost. And once you deduct both of those costs, you now have your net profits. Now that's going to give you your net profits for the first month. What you now do with this foundation right here is you are going to grow your revenues and you're going to grow your fixed cost at a percentage. So your growth rate for your revenues might be 10% or 5% or 3% on a monthly basis. And you want to use that as a percentage to grow your revenues, because again, they're asking you now to predict your revenues in 3 months and 6 months and a year. You haven't even started your business. How are you supposed to do that? That's why you use percentages. These are our growth rates. We feel these growth rates are justifiable. When you're using percentages, they're a lot easier to defend, as compared to hardcore numbers and saying we're going to have 20 customers tomorrow, and in 6 months we're going to have 170 customers, and then a year we're going to have 210 customers. Once you open that can of worms, you now need to justify how you're going to have those customers at those points in time. And they're going to now hold your feet to your fire saying, look, you said you're going to have these customers. Use a growth rate, use a conservative growth rate. And then what you say is, look, this is what we anticipate. It could be a little bit more, could it be a little bit less? Now you're using fluctuating numbers, which is, again, justifiable. And as long as you keep it conservative, your financials will have a solid foundation from which to build upon. All right, hopefully this information was helpful. If y'all ever need a business plan written, give me a shout and I'm subscribed. Thanks a lot.